Welcome back to the Endeavors AI podcast. I'm Collin McKee, founder of Endeavors AI, an AI agency that's focused on building workflows, agents, and automations that help companies buy back their time. We work with operators and investors to move manual functions and improve reporting, create operation leverage, use practical automation and not just buzzwords. So today we're talking about something that I don't think is talked clearly enough about, what the role of AI in manufacturing, merging and acquisition, and what truly increases the valuation when it comes to time to sell. So I'm joined by a person that hopefully can tell us a lot about it, Ron Krudo, managing partner of Wright Street Advisors. Ron, welcome to the show, and thank you for taking the time.
Thank you so much, Colin. I'm very excited to be here. Looking forward to having this conversation. It's absolutely an important topic in the M&A process, but also just for manufacturers in general.
Absolutely, absolutely. So let's start with a quick background of you there, Ron. How did you end up focused on lower to middle market manufacturing?
Definitely. So I grew up in manufacturing. My family was actually apparel manufacturers for many years from my great grandparents. So it's a pretty generational thing. And I was even an 8-year-old, 10-year-old kid printing T-shirts and cutting cardigans and involved in my family business. So I love manufacturing. I think it's a bloodline of our country, as many of us know, and especially now it's a big topic that's being talked about a lot. I spent some time actually in the management consulting and integration space where I was helping business owners integrate post acquisition or prior to prepare the company for potential buy side or sell side opportunities. Fell in love with the process, fell in love with the idea of helping someone through potential exit. And I decided to go head first into investment banking, and I've been a part of it ever since. And I've worked with a number of different businesses. And when I talk about manufacturing, it goes all the way from like aerospace, defense to chemicals and plastics. And I've worked with a lot of different manufacturers and business owners. And I found a passion for it just to think of my coming back to the beginning, think about my family and the ones that have sold their businesses and what the process was like for them. And I it's creating that family wealth and generational opportunity.
So that answers the next question that I had, but maybe I can ask in a different way. So your differentiator is manufacturing, right? That's not something that we hear of the majority of time when it comes to this space. So what is your traditional clients type look like? You said it does span, a large array of manufacturing, but traditionally, who are you focusing on? Kind of a niche that you found that you
Definitely.
guys work best with.
Definitely. I think it's more the size and type of business within the manufacturing and industrial space. I used to actually work agnostically. I used to work with all types of businesses, and I found that it sometimes becomes more challenging to create even greater value when you're not as focused within the industry and understand the opportunities there. So what we do is we focus on the lower middle market. We're working with business owners that have $1 million in EBITDA, all the way up to about 10, $15 million in EBITDA. We feel very confident in that space that there are opportunities to sell to or acquire businesses, whether it's to financial buyers or strategic buyers that are looking for like a $2 million plus EBITDA company that's in the manufacturing space, or if it's a $1 million, $500,000 roll up to a company that we're working with on the buy side. But it does more focus on the side of being privately held or having private equity backing, but not being majority owned. It's really the owner's focus. It's a small team, family companies, ones that are looking for that next stage, but don't have the full expertise of the financial team to help them find that opportunity. So it's more of those companies that are in the lower middle market that are privately held. And again, when I talk about the niche of manufacturing, really a lot of people say there's like 6 different to 8 different subsectors within manufacturing, and they're absolutely right. What I've noticed is that a lot of the people we work with that are looking to acquire businesses in that space are very open-minded, whether it's government contract or defense or doing like bottle manufacturing or things of that nature. They're very open-minded to those different opportunities. So we're very flexible to work with those types of business owners as well. I have a company that's doing apparel manufacturing, and I have a client who's also building gears for planes and the defense sectors. I've definitely done both.
Yep, broad spectrum indeed. So who do you typically sell to? Is it private equity, family offices? dependent sponsors, or does it really go case by case all over the board?
So it used to be the private equity was the ticket when you brought these opportunities to market. Of course, there's a lot of conversation. I'm sure you're seeing it as well with the business owners you're working with, that it's no longer the traditional business owner you would expect, but either the guy who built this business is on his own and had it for 50 years, and then the private equity company that invested in it and is now scaling it. There's independent sponsors, there's search funds, there's family offices. Family offices have been getting very active, actually. They've stepped away from just the traditional investments or the public markets. Are also doing a lot of private investing as well. So I've seen a lot of that. I've also seen a lot of different types of businesses that you wouldn't even expect that are trying to diversify their portfolios, acquiring manufacturing businesses. And then strategics have now understood, if I have a 25-30 million dollar company or $50 million company, a great idea for me is to go and acquire a few of these smaller businesses that private equity wouldn't look at because it's just outside of their scope, and build their own EBITDA up to a point where they can then sell as a bigger portfolio. So I used to say it was really my buyers and my relationships in private equity. Now it's the buyer relationships I have are a lot wider, and it really depends on the business. I think there are times where, yeah, like we're talking about today, AI and improvements in the company. Like when you have a very legacy company that's not automated and there's not a lot of robotics workflows, AI integrations, you are probably not teed up to sell to every single buyer. You're more teed up to somebody who's going to roll up their sleeves and potentially invest the capital to innovate and bring that manufacturing process to be a more advanced manufacturing facility. And so it limits the buyer pool. So sometimes, depending on the seller, can also adjust the type of buyers that are looking at the deal.
Great. Excellent answer. Yeah. I mean, at this point, if you're not getting something before the stock market or the public markets, you're really missing out a lot. A lot of gains there. So everyone's turning to that, and it's just where you need to be. So turning now to AI, it's right there, right up there. Everyone's talking about it. Everyone's trying to to wade into it. But from your seats, from your active deals, what do you think actually that means in the manufacturing business? What is AI moving the needle to do?
Absolutely. I've noticed that everybody's talking. It is the buzzword. There's so many events going on right now that are talking about innovation and opportunities with AI and how to integrate AI into your business. And so it's definitely becoming a very important topic, even in the buy side, sell side process. Everybody's asking, how are you utilizing AI and what parts of your business will be affected greatly by AI when it starts to evolve further. I can say, I feel as though we're in that precipice of, is it time to invest or is it time to hand the keys to someone else to put in the investment? And that is what's playing into a lot of these deals, is that CapEx is what we call capital expenses. Am I looking at this business as one that I'm going to have to immediately put $500,000 in, but I will be able to cut expenses in other areas to be able to bring it to market, not to market, excuse me, but bring it up to par with its competitors so I don't lose out? Or is this an opportunity where it's already been invested in? The owner of the business put in the time and effort to create advanced systems. And when we talk about AI, it's as simple as, they used to have people sit on the line and watch every product as it passed, and they would be able to find maybe 10% of defects. Now they're using a visual AI that's reviewing every piece of product as it goes through. You still have the human touch. You still want the human there to decide on the backside of if it's worth still pulling. But the AI is able to identify 40% of errors within the manufacturing process. So you're within those products before they go to delivery. Instead of getting refunds or returns, excuse me, we're catching things a lot more readily. And so it's built in that way. And those things to a private equity buyer or a strategic buyer or even a family office saves a lot in margins, and it creates more opportunities. So it's absolutely a topic of conversation. And I think the biggest question is there a requirement to invest? Has it already been invested? And how extensive is it going to be to get this to be at a competitor's level? So the larger manufacturers don't gobble you up. And when I have that conversation, it really is the question of, do you think it's time for you to invest, or do you think it's time for you to sell? And do you want to let someone else put the money in? Now, you don't have to sell 100%. By the way, I love to tell people this. I was just on a conversation with somebody 5 minutes ago that was like, oh, what am I going to do if I sell? A lot of people actually want you to stick around. So even with AI, they still want you to be there, even with the evolution of these technologies, because you could be the one to help them transfer that industry knowledge to the AI systems to further advance the company. So sell 70%, stick around and help them modernize the business, and then step away. So there's always a way to build on it. So I know that was a long-winded answer, but I'm going to tell you AI is important.
No, I appreciate it. There's a lot of people that just focus on the low hanging fruit of just the spreadsheets and, writing emails and this, that, and the other. You know, that piece about visually actually, I guess that's quality control and utilizing that tool. That's got to be a wonderful recoup on hours, right? Instead of employing someone just to stand there or a team of people to just stand there. And that's additional revenue walking out the door. We're not trying to replace all the humans, but we like to get them doing things that aren't so mundane of tasks. And if we can do some
Absolutely.
some work with AI, that's awesome.
I just to add one really quickly, I did a facility tour recently for one of the members of an association I'm a part of, and what they did, which I loved, I actually asked them that personnel question because everybody's worried about the what if with personnel, and I asked them the question of if they ended up replacing a lot of people. What they did was actually train their legacy team to transfer that knowledge because it's super important. You need the senior professionals helping the AI do better because it can't just learn on its own. And so they're still actively involved in helping the AI, and they're going to consistently be there because that human touch does make a difference. But they've also promoted a lot of people to other positions in the company. It's not like they cleaned house. They do care about their people. I think manufacturers of all people actually really. I think a lot of industries care about their personnel. No, manufacturers really care for their teams, to the bloodline of their business, and so even with the evolution of AI, I don't think it's always about cutting the people. It's about really finding solutions that enhance the personnel's ability to do more.
100% well said. So if you walked into a $5 million EBITDA business and they had, let's call it 3 years before exit, what in your experience would be the three operational fixes you'd tell them to focus on before that exit?
So $5 million business, 3 years to exit. What are operational things they can work on? Okay.
And I would hope
I
that
would
you could
say
pepper in some automation somewhere.
that I can definitely see some automation. I think the three things I would highly recommend to double down on and really put your energy to is financial controls enhanced by AI. A lot of manufacturers, even at $5 million in EBITDA, don't have a lot of really strong financial reporting, financial margin tracking, expense tracking, and reporting. So, enhancing the financial controls utilizing AI, absolutely worth the investment. It's going to be great for when you sell. It's going to be great for the years before you sell to do even better because the more you can reduce some of those costs, the higher your EBITDA is, better adjustments that you can make, the better value you're going to get for your maximizing value when you do it. Another one that I would say is efficiency. So if you can show through your supply chain or through your operations in the facility when you're manufacturing, if you can find ways to enhance the quality control, so you're reducing expenses and returns and that process, and if you can also find ways to increase production utilizing AI, again, not replacing anybody but enhancing production. Sorry about that, the puppy's in the house. Enhancing production, I definitely think it makes a world of difference in the value. And then the third one where I find that a lot of people have fallen short is in their CRMs and in their ERCs. So like utilizing AI to do better reporting and data collection. You really, the more you can defend your numbers in an M&A process, the more successful you're going to be at maximizing value and not losing value in the due diligence process. So if you can show greater efficiency, that means you increase your EBITDA margins just by doing more with less, with the same team, excuse me. If you do better with your financial controls, utilizing AI and enhancing there, you're going to have better reporting and better understanding of your margins that you can deliver to a potential financial buyer. And then if you have better reporting on your data points, your people, personnel, all of those different issues with your customers, all that information, retention and churn and productivity, all of that plays a very strong hand in defending the future growth of your company, the ability to continue to scale the company. So I think when I talk about, if I'm talking to you 3 years before you exit, if you don't have processes in place, if you're rudimentary, but I assume a $5 million company has some processes and a $5 million EBITDA company has processes in place. But let's say you have nothing, start there. So use AI to build an SOP, a proper training. That's going to help you in your sales. Use AI to start at least bookkeeping your company without doing it, rudimentary on a book, because I see that still with $5 million EBITDA companies. And then use AI to at least populate follow-up reminders and check-ins with your customers. Again, simple things you can do if you don't have those things. But if you do have some
100%.
of this stuff, the other three things at least are a little more advanced and gives you better reporting and better information to share.
Yep. Make that exit easier, right? Make it smoother and
Exactly.
sexier, if you
The
want to call it
number
that.
the number one thing that kills deals is deal fatigue and inability to deliver confidence in the process. So if you have the ability to give the data to back it up and be able to report things really quickly and not have to say, I need to wait for my CPA or bookkeeper for 3 weeks, you're going to get to the finish line a lot faster.
Cool. Excellent. Well said. So, a quick pause. Just talk to the audience. If you're enjoying the conversation, we invite you to like the episode and subscribe to the channel. And if you have any input, if you want to, hear more about the manufacturing space or whatever, the newest trends in AI, please feel free to comment. We read them all and we enjoy the feedback. So, but again, to continue, another question for you: Are private equity firms demanding AI readiness now, or is it something where, to your point, it could be added on the back end? What is their preference?
Well, I think that there's a review in valuation because of it. So I don't think there's like if anything, it's kind of that distressed opportunity where they see opportunistic value, but they're not going to pay for it in advance. You go to a home that you're going to buy and you see that there's issues with the plumbing and the HC and you have some improvements there. You're just going to offer a lower value. You probably get it for a discount because you could do the improvements for less. You have a team like Collin backing you up that can jump right in and do the AI, and it costs you a quarter of the cost of that small manufacturer doing it. So you pay a little less, but you can gain a lot more. And I see it a lot there. I don't think there's a request or an expectation where they're just going to walk away from a deal. But what they would like to do is two things. They want to see upside, so don't expect the highest premium valuation if you haven't done anything. But they also want to know there's a strategy. So if you can provide a strategy and they don't have to come up with the whole thing themselves because you know your business, it does help a little bit. It makes the valuation a little higher. They want to keep you involved. They want to see where you can assist in that next phase. But I think it's not an expectation. It's not a mandatory thing. I will say that in the next 5 years, though, in 5 years from now, maybe even sooner, maybe in 3 years, it will be an expectation because if your competition has it, they're going to outpace you and their margins are going to outdo you. So right now, a lot of people are, I'll tell you like what I'm seeing, and I'm kind of having some candid conversations with my CPA friends and my other bankers and people in the industry and operators. There's a fear of selling because of some of this stuff. There's a fear of going to market because you aren't as advanced, or that tariffs and other issues in the market like job force are challenging for you. So you want to wait to sell because you want to get things better. Maybe you had a little bit of a dip of revenue, a little bit of a dip in EBITDA, and so you just don't want to run to market because you're a little nervous of all the factors outside of it. I've seen a little bit of a contrary where I've seen a lot of firms from family office, private equity, independent sponsors that really want to buy these types of businesses. They're very bullish. The opportunity in the market to enhance the companies, not that they're distressed, but that they can invest, and they're strategically thinking how to take a company that's 40 years old and make it innovative. And so even though you might be worried about selling and maybe AI is holding you back because you think like without this, no one's going to want to buy me. And with the other
Mhm.
issues, no one's going to want to buy me. They're all going to walk away or give me nothing for my company. I actually think valuations are going up a little bit. People are very enthusiastic about buying these manufacturers. Are paying a little bit more to get it done, even without the AI. So I would say now is a good time that if you don't want to put in $1,000 or $500,000 or even $100,000 into enhancing your AI for your company, in 5 years from now, it will be even harder to sell. It will be an effect on the companies. I think today is a good opportunity to sell and ride the wave, roll over some equity, join the next phase of growth, and see it through. I actually think now is a better time, not a time to be worried, in my opinion.
Okay. Yeah, I mean, there's definitely a lot of opportunity, and it seems like the current administration wants to make it easier for investment in manufacturing space. So I would agree wholeheartedly. What would you say the smallest operational change that would make the biggest exit impact would be for a founder? Return on investment that a founder could change in their manufacturing process.
That's a very, very good question. I think right now, well, that might be a big change. So I'll talk about that in a minute, actually. I think on the smallest side, I've seen a lot of people take the time to analyze bottlenecks. Most manufacturers don't take a whiteboard and just write out the process as clear as day. Take your department heads, put like a section on a whiteboard and say, that's your section. What do you do? And what's your process? And have every single one do that. It's a small change. It's not that hard to do this. You could do it in an afternoon. And again, I'm an investment banker, so I don't do this with people, but I used to do it when I did the management consulting stuff, and I saw how quickly this can improve things. You'll find very quickly certain bottlenecks that reduce the time frame or increase the time frame, excuse me, to deliver a product or service. I would address that. So the small changes, take the time to sit with your team and actually write out your process and see it almost like a system, just like your assembly line would be. And then pick that one bottleneck, the first bottleneck you notice, and just invest a little bit of time and money into that. It's a small change. You'll see immediate return on investment. You'll be able to process more, deliver better. You will see an immediate change in your investment. A big change is what I was going to say because you brought up the this year's in the administration's commitment to try to increase manufacturing in the United States, the big beautiful bill, the BBB that everyone's talking about, 100% depreciation on improvements. It's there's a lot of opportunity there where you can do R&D and utilize that as tax credits. And I'm not a CPA, so I always recommend talk to your CPA. But tax incentives and also investment incentives that you could appreciate. So if you're considering investing in new machinery, I think this year would be a good time to do it. If you're considering investing in AI enhanced machinery, I would look at that this year because you can depreciate it in unique ways. Again, I'm not the investment banker. I'm not, excuse me, I am the investment banker. I'm not the CPA, but I do know that there is, even in a transaction, it helps because you even adjust for depreciation and such. So I would go back and see if you could improve your process with a couple of new machines, and this would be a good year to do it.
Good advice. Tax affects us all. We can't, no one can avoid it. And it makes a big
Exactly.
difference in your bottom line. So putting that on, back on your space, where do you see automations and AI having the biggest effect on on your seat specifically, manufacturing, merging and acquisition?
I love that question. I think it's something I'm exploring readily. It's like we're professional services. So just like lawyers and other CPAs, accounts, all that stuff, we all are affected in some way, especially at some of the levels that do like financial analysis and creation of materials and delivery of materials from due diligence and such. A lot of that, there's opportunities right now and new tools and technologies to help streamline and automate. And like I was saying earlier, I would love to see more reporting on the side of the manufacturers to deliver better information for the buyers and, or for the companies we're trying to acquire for my clients. And so I definitely see an effect with AI there. I've noticed a few different tools that are incorporating it in their process. A lot better market research is being delivered utilizing these tools as well. Analysis, I've noticed tremendously. You could tell very quickly if someone fed a question, requested a list of questions from AI in our deal process. We will, and manufacturing is complex. When you're working with a lot of different types of manufacturers, there's some questions you might overlook. And now you have a tool to help you better prepare and analyze the information being delivered to you from the data that we're providing. You have to be cautious because you're under NDAs. We can't deliver everything into the system, but there is great resources right now. So I'm seeing better questions and better reporting and a very clear assessment of future roles in the company that can be enhanced utilizing AI. I'll always need an analyst, I'll always need an associate, and I'll always need to deliver clean, correct, accurate information. How we're enhancing that is where the AI is playing in. Right.
Well said, 100%. So, Ron, I thank you very much. The conversation's been practical, impactful, and easy to digest. I think for those that are in the manufacturing space and are interested in considering capital investment, please reach out to Ron, at Wright Street Advisors. We'll leave some links down here below in the description so you can contact their firm. And if you're looking for AI automations, ways to, you know, uh, unclog those bottlenecks, that's what Endeavors AI is here to do, to help businesses get their time back to really focus on what matters. And if what matters to you is an exit, Ron and I can both help you out. So, Ron, thank you very much for your time. And to the folks at home, thanks for listening. And we will see you on the next episode.
Thank you, Colin.
Cheers.